Market indicators are off the charts. Just in the past few weeks, we've seen the VIX record one of its largest spikes and crashes in its entire history. And we also saw the market sell off nearly 10% from July 16th down to August 5th, which was the day of that huge VIX spike, only to rebound 8% off of the recent lows in the past 2 weeks. So what does this all mean for us as traders? First, let's start off by taking a look at the SPY. If we scroll down to our historical GEX, we can see over the past month or so, gamma exposure has been in negative territory. This basically means we're likely to see higher volatility and lower prices during this period. Of course, over the past week or so, gamma exposure has slowly been increasing until today we've actually seen a flip into positive gamma exposure territory. This is exactly what we've been seeing since that massive volatility spike on August 5th. Prices have been increasing along with gamma exposure, and we see today we are above the zero gamma exposure line. Now, today is the big monthly options expiration date, and so if we look here at our gamma exposure surface model, we can see that there is a huge concentration expiring at the 555 strike today, which is about where we're trading right now. We're at 554.10. And what this basically means is that there is a lot of gamma exposure that is going to be rolling off. That is large amounts of open interest and high gamma effects that will be rolling off, opening up the door for more moves into these positions out further in time. You can see they look really small compared to this massive spike here, but these are positions further out in the expiration, and we can see strikes between 550 and 560. It wouldn't be surprising to see some early weakness next week after all of this positive gamma exposure rolls off, potentially in this open gap here that was left over after yesterday's big gap up. So a potential scenario would be Monday, Tuesday, some initial weakness before filling this gap, and then a continued bounce to higher prices. If we just look at the daily candlesticks here, this August 5th low, which was also the day of that massive VIX spike, saw a really huge ramp in volume on that day, signaling that a potential temporary bottom was potentially in place. We never broke this low here. So that V-shaped action combined with gamma exposure coming back into positive territory. We've got the major OPEX for August coming today. A lot of these factors signal potential further upside is possible after an initial dip in the market next week. That's what we'll be looking for, potential opportunities to continue long positions in the market. So let's look at a few names that we're actually going to be watching heading into next week. One is GLD. Just today, GLD tagging this 230 strike. This has been a large gamma exposure concentration we've been watching for quite a while. We actually closed out a long GLD position yesterday, so we were a little bit early, still made some decent gains. But the interesting thing is that we still have volume coming in at higher strikes. So this is something we really want to pay attention to, as GLD has really been making a nice breakout move out of this consolidation zone up from 220 up here into the 230 strike. And it's interesting that we see volume at higher strikes, and this could eventually result in higher gamma exposure concentrations and potentially a price move into this 235 and 240 strike. If we just take a look at the 3D gamma surface, obviously big expiration today because today is the August OPEX, as I mentioned before. The 230 strike, all this positive gamma exposure is going to be coming off. But coming out here into September, we see again the 230 strike has large gamma exposure, and there's growing concentrations at the 235 and 240. I know it looks really small compared to this massive pyramid here, but these are going to be the levels that will start to become more important as we head into next week and further into September. So these are the levels we'll be watching on GLD. Another name we're watching is Goldman Sachs. This is something we've been talking about in our Discord community. By the way, I'll put a link in the description below if you guys are interested in checking that out. Come on in and say hi. But but we've been discussing a play on Goldman Sachs, particularly buying a double calendar spread targeting the September 20th expiration. We decided to target this 510 strike, which is still within this dealer cluster zone, but the financials and Goldman Sachs in particular have all been in positive gamma exposure territory. We see most of the volume coming in at higher strikes here at the 505 and 510 strikes. So we feel like once this consolidation in this zone is finished taking place, which could take another week or so, we would expect the probabilities to increase for a continued move higher. So that's the way we're playing Goldman Sachs. And if we just take a look at the financials in general, if we come up here, let's take a look at the XLF. XLF, the financial sector ETF, a really nice bounce off of this lower dealer cluster zone, breaking into positive gamma exposure above the 0 gamma level. And we mentioned a couple of videos ago that the 43 strike and the 45 strike have the largest GEX concentrations. That has now since shifted. Obviously, we see the 44 strike growing in gamma exposure with price trading higher up here. We believe the financial sector will continue to be a market leader, along with healthcare and some of the other sector rotation plays that we've been talking about over the last few weeks. But on this XLF, the 45 strike certainly looks like an obvious target here going into the September expiration. And so we are going to be looking at potential option strategies to target that level, hopefully collecting some premium and some theta decay over the coming weeks. Another name we'll be watching is Nvidia. Nvidia has had just a massive run over the past week or so, up 20% off the lows in just a few short trading sessions. We're coming into the largest gamma exposure cluster here. Just from a risk reward perspective, I'd like to see some sort of pullback maybe into the 120 or ideally into the 115 level, where we could enter in long positions somewhere in this zone on that pullback for a continued move higher into the September expiration, perhaps up to the 130 strike. Of course, these are just probabilistic scenarios that we're hoping will happen. This would give us a better risk reward standpoint to enter at a little bit of a lower level. I mean, the move has just been so sharp and so fast up into this 125 strike. But I think this could be a really great way to collect some premium by, for example, putting on some iron flies, targeting the 125 or 130 strike, depending on how gamma exposure shifts into next week. So that's another play that we'll be watching on Nvidia. Now I just want to take a look at the sector performance in the market over the past week. We've sorted here ascending by the week, by sector. And so if we just scroll down, we can just take a look at the best performing sectors, which have been electronic technology, consumer durables. This is mostly like car makers like Tesla, of course, leading consumer durables, retail trade, and tech services as well. These have been some of the worst performers over the past month, but are now rebounding really nicely. And so the market is basically telling us that, the leaders on the downside are becoming the leaders on this bounce back up. So this rally could have some sustained moves. I think volatility has dropped so drastically. If we stay below 20 on the VIX, I think that the likelihood for these sectors to continue performing well, outperforming the rest of the market, is relatively high. We should see some catch up in small and mid caps as well. But this is a really interesting development just over the past week, and I think it's something we really need to pay attention to. Watch these sectors as we go into this next week after OPEX, and let's see how they perform. There could be some really great opportunities to get in based on the gamma exposure structure. And if there's continued performance in these particular sectors, these will be the sectors that we are going to be looking for potential long ideas in the next week. If you guys are interested in taking advantage of the tools and analytics on our dashboard, head over to geeksoffinance.com. Check out our memberships. Also, be sure to head over to our trading community Discord. It's free to check out. Also, don't forget that our members have free access to our Geek University. This is basically our 5-hour option strategy course where we discuss volatility, gamma exposure, and our overall trading strategy approach included in all of our memberships. Definitely check that out if you guys get a chance. Thanks so much, everybody, for watching, and we'll see you guys in the next video.